Yes, please, can you hear me? I talked about three stages of successful trading career. And what is the first one? Nobody is talking.
Prof,
Yeah, Mr. Cole.
yeah, I don't know, but I know I had mechanical stage.
You're right. God bless you. What about the second stage? Stage two is what? Yes, any other person? Stage one is the mechanical stage. That is what we have on the screen. What is stage two? Yes, stage 2. Mhm. Please, 1 minute. Okay, let's move on. All right, maybe some of you are not here. So stage 2, we talk about the subjective stage, and the last one is the intuitive stage. So mechanical stage, you move on to the subjective stage, and then the intuitive stage. So we said at stage 1, that is the mechanical stage, is all about learning and without trading. So you just learn all there is to know about forex trading. So you don't have to trade. Yes. So you see, many people skip this level and they take some trade, 2 months or 1 month course on forex, and then they teach them a little technical analysis, and they think they are well poised to trade. And I'm telling you, I can show you places where you can go and take some 3 months course, but trust me, you will lose a lot of money. Mr. Collins can bear witness with me. You can do this for a year or 2 or 3, and you will not make any money. So if you want to be successful in trading, remember the three stages are mechanical stage, subjective stage, and the intuitive stage. So don't skip any of these stages. Follow through the process, and trust me, you will make it. Right. Um, for today, what we want to look at is we want to look at what is forex, and under that we are going to look at what is forex, what is traded in forex, buying and selling currency pairs, forex market size and liquidity, how to trade forex, and we also talk of how do you trade forex. So how to make money trading forex, know when to buy or sell a currency pair, what is a pip in forex, and what is a lot in forex. So that's what we're going to talk about today. Okay. Before I move on, let me ask: is my voice still clear? And can you see the screen? Let me hear a response from you, please. Please, are you around?
Yes.
Yes. All right. All right. Let's move on. Patience. Thank you. All right. So I gave you a website to start reading about Forex. But those of you who are not able to do that, I have the information here to share with you. So you stay tuned and let's go. So when we talk of Forex, we are saying it's a global financial market that allows one to trade currencies. So we know the currencies in the world. Please, this time around, I want it to be very interactive. So I'm going to open your microphones. I want to hear your voices, please. So when I ask a question, be very quick to answer if you know, so that this class will be very interactive and not just being too bored. Okay. All right. I can see Lettuce is around, Asenso is around, Susie is around, Patient 2 is around, Mr. Collins is here. Some others join. I think their networks are not very stable, so they will join later on. Okay, so let me repeat that again. We said that in the Forex market or in the financial market, what we are going to do about Forex trading is that we are going to trade currencies. We're going to trade currencies. And I hope we all know currency. In Ghana here, our currency is the Ghana cedi. When we go to the United States, their currency is the United States dollar. When we go to Britain, we have the Great British Pound. When we go to the other European countries, for them, they have the euro. When you go to Canada, they have the Canadian dollar. When you go to Japan, they have the Japanese yen. Then when it comes to South Africa, we have the South African rand. When you go to New Zealand, they have the New Zealand dollar. In Australia, we have the Australian dollar, and a lot of them. There are so many currencies in the world. And so in Forex trading, all that we are going to do is that we are going to trade currencies. So you'll be trading either a dollar or a pound, Australian dollar, Japanese yen, and a lot of that. So in Forex trading, we are saying that one currency will be stronger versus the other. Recently, in Ghana, we noticed that the dollar was actually overpowering the cedi. So $1 is equivalent to about 16 cedis currently. And so that difference, the rise and fall of the currencies, is what we learn in Forex. And by gaining that technicalities, you'll be able to profit from that. So we are saying that when you end up correct, then you can make profit. And so in Forex trading, all you're going to do is that you look at the currencies and which one is being stronger than the other. So you take position with the one who is becoming stronger, and then you profit from that. So that is it. Now, we are saying that we also talk of exchange rate. You see, when we talk of exchange rate, we are saying it is the relative price of two currencies from two different countries. So I've set an example with the cedi and the dollar. And so we realize that if you want to exchange your dollar for the cedi, you see the price difference that they will give it to you. So that is it. And so you see, I said that Ghana cedi, if you think that Ghana cedi is going to be stronger than the dollar, you exchange your dollar for the cedi. But if you think your dollar is going to be stronger than the cedi, then you can keep on holding your dollar, and as it gets to its peak, then you exchange it for the cedi and you get a lot of money in cedis. So that is how we trade Forex. So you take the side of the currency which is being stronger to the other. So that is it. So when you do that, we are saying that you have exchanged one currency for another. So in the Forex market, we are saying that it is usually known as Forex. So when we talk of Forex, the Forex, it is actually, let me say, we have taken the first two letters or the three letters of the two words, foreign exchange. So when you look at foreign, you have the FOR, and then the exchange is ES, and then we put these two words together, and then you get Forex. So when we talk of Forex, we are talking of, we can also say, let's say, FX. And we are saying it is the largest financial market in the world. You understand what I mean? It's the largest financial market in the world. We will talk about a lot of financial markets in the world, but Forex is the biggest one in the world. And so we said that the Forex market is also a global, decentralized market where the world's currencies change hands. You know, when we say decentralized, it means it is not controlled by any government. No one government controls the Forex market. No, it is a decentralized system. Yes, that is why it is everywhere and it is worldwide. Right. I say that due to the wide range of market participants, including central banks, financial institutions, corporations, hedge funds, individual traders, exchange rates change by seconds. So the market is constantly in a flux. So when we talk of forex trading, we are learning as what we call individual traders. But in the forex market, you will find other traders like the central banks, like let's say Ghana Bank of Ghana. When you go to the US, you have the Federal Reserve, and we have that of the Britain, and those with the largest economy. You realize that they are all participants of the forex market. And we also have other corporations, other institutions like the mutual funds and all that. They are all trading, insurance companies and all that. And we also have hedge funds. You can go and read on hedge funds. You know, hedge funds, they are basically a company that actually prevent price fluctuations with respect to companies who are buying and selling from different countries, so that they can actually hold price to prevent loss of other companies. You know, so you can keep reading on hedge funds and other things like that. So when we talk of market participants of forex, it is not only those of us who are learning trading that are participants in the forex market. We have big institutions that are trading in the forex market. That is why we are saying that the forex market is the largest global financial market in the world. And we are saying that most of the currency transactions that occur in the global foreign exchange market are bought into brackets and sold for a speculative reason. So in the forex market, what we are going to do is that we are going to speculate. So like I said, the cedi and the dollar, you do your analysis with some factors that you think will affect the price of, let's say, the Ghana cedi or the dollar. And if you think you are biased to the dollar, thinking the dollar will be stronger than the cedi, it means if you have cedi and you buy more of dollars, later on, if you exchange it back to cedis, you get a lot of money. So that is how the foreign currency or the forex trading is all about. So you can see from this diagram, you can see that the forex market is that blue bar with over $7.5 trillion trade volume per day. Now let me illustrate it like this. Let's say you work at Kejetia market, okay, Kejetia Dubai, and somebody who is working at a market in a certain village. Which two of these sellers will make a lot of money? Generally, we know the one working at Kejetia will make a lot of money than the one working at the village market, because the amount of money that is being transacted on that Kejetia market will be very stronger than that of the village market. And for that matter, if you compare the other exchanges in the world, we have the Forex market, we also have the New York Stock Exchange, we have the Tokyo Stock Exchange, the London Stock Exchange, even we have the Ghana Stock Exchange. But we are that of all these exchanges, the Forex market is king. Because if you look at the trading volume or the cash flow for these exchanges, we are that for London, we have $7.2 billion per day. For Tokyo, that is Japan, we have $18.9 billion per day. And for New York, we have, I think, $22.4 billion per day. But only Forex market breaks the rule. It goes beyond even billions to trillions of dollars per day. So you see, if you are a participant in such a market, making a lot of money is so easy. That is why I keep telling people that if you learn Forex very well, it means making $100,000 is easy. A day, yeah. If you have a very good capital or a large sum of capital, making even $1 million a day is possible. It is really, really possible. You can even make more than that because the amount of money being flowing through the market is too much that amount of money you can make per day is just a nano fraction of what is being transacted per day. So that is why, a lot of Forex traders who have actually, let me say, they have the right strategy to trade the market, have a lot of money because they are trading in a market where a lot of money is being transacted per day. And take note of this. In the Forex market, we have only 24 hours in a day to trade. And then we have 5 days in the week. So we don't trade in the weekends. So we don't trade on Saturday. We don't trade on Sunday. We trade from Monday to Friday. And so the market will open and close. And it continues like that throughout the week from Monday to Friday. And on Saturday and Sunday, we go on a break. Yeah, so like today is Sunday, the Forex market is off. Nobody is trading on the Forex market. But it will open on Monday and then it continues to Friday. And then the cycle continues on and on and on and on. Right. So that is that for Forex. So we have actually talked about what Forex is, the exchange rate, the participants, the banks, corporations, hedge funds, individual traders, or we call them the retail traders like you and me. And we have also talked about the trading volume of the Forex market being the largest in the world. And then the days we trade from Monday to Friday, and for weekends, we don't trade. All right, let's move on. When we talk of what is traded in Forex, it's very simple. We trade money. Yes. If you are a Forex trader, you are just working with money. You are not going to work with any physical asset or anything. You are working with just money, that's all. And when we talk of money, we are talking of the different currencies in the world. I've given you several examples of the US dollar, the Canadian dollar, the euros, the British pound, the Japanese yen, and that is it. A lot of them, okay? And only two things that we do on the Forex market. We all know that trading is all about buying and selling. So whether you go to the normal market, you either buy a pepper or you sell a pepper. You either buy a coconut or you sell a coconut. And so the Forex market is all about buying a certain currency or selling a certain currency. That's all we do. So that's all. And now, listen to this part very carefully. You see, some people think that Forex trading is a gambling thing. No. Even though we are saying that when you are trading in the Forex market, you are betting on a currency pair. The moment they hear the word betting, they think it is gambling. No, it is not gambling. You see, when we talk of the word betting is just guessing. And if you get your guess right, that's how you make money. And the fact that we use the word betting does not make Forex trading gambling. No. So listen and listen very carefully. So we say that, let's say you want to buy maybe the Japanese yen. In this case, we are saying that you are basically buying a share. You are basically buying a share in the Japanese economy. Are you listening? So let's assume that all Forex participants think that the Japanese economy is doing something better. Then they begin to invest in that economy. In this case, they are actually buying shares. If you understand how, I think those who did the economics, you understand shares. And so you know what I'm talking about. And so we are saying that if you sell your shares back to the market, you would end up in a profit. And so forex trading is about buy a share, sell a share. That's all. That's all. And so we are saying in general, the exchange rate of a currency versus the other currency is a reflection of the condition of that country's economy compared to other economies. So though for me, I've never traveled to the United States, but at least learning the forex market, you get to know the economic status of the United States of America's economy. So that is how forex trading is all about. Now, I've said earlier that forex trading is about money. We are trading money. And when we talk of money, I've said it is about currencies. It is not every currency that we trade in the forex market. No, you will not find Ghana cedi over there because our economy is very weak, like a sack. The moment you put it on its toes, it will fall. And the fluctuation will be very serious. And in fact, it wouldn't help stabilize the forex market. So it is not every currency that we trade on the forex market. Okay, and so we have some currencies that we trade, and we have the major currencies, the minor currencies, and the cross currencies, the exotic pairs, and all that. So we are going to look about some of these things. So when we talk of a major currency, we are saying that a major currency is a currency that actually make paired with the US dollar. Or when we talk of the major currencies, you are talking of the countries with the largest economy or strongest economic status. So when we say major currencies, we have examples such as the US dollar, the euro, the Japanese yen, the British pound, the Swiss francs, the Australian dollar, the New Zealand dollar, and then the Canadian dollar. These are the major currencies in the world. These are the major currencies in the world. Now, out of the major currencies that I've mentioned, you realize that they are actually 8 of them, 7 of them, 8 currencies. We have the US dollar, the euro, the Japanese yen, the GBP, the British pound, the Swiss francs, and then we have the Australian dollar, the New Zealand dollar, and the Canadian dollar. We have 8 of them. And out of the 8, the Australian dollar, the New Zealand dollar, and the Canadian dollar, we call them commodity currencies. We will talk about why they are called commodity currencies later. So let's move on. So just understand that we have some major currencies in the world. And so these are the major currencies. The chart is over here for you. I've said it already, so let's not waste time on that. Now, when we talk of the major currencies, like I said, the USD stands for the acronym or the currency symbol of the United States. And in trading, you see, somebody may not say the dollar, but because we have different dollars in the world, even the Zimbabwean dollar is also there. So there are some nicknames that have been given to certain currencies. So when we talk of the back, it is a nickname for the US dollar. When we talk of the fiber, it's a nickname for the euro. When we talk of the yen, it's a nickname, and as well as the currency's name for the Japanese yen. And when we talk of cable, it's for the British pound. When we talk of the Swissy, it's for the France or the Switzerland's Swiss francs currency. When we talk of the loonie, it's for the Canadian dollar, and the Aussie is for Australian dollar, and the Kiwi is for the New Zealand dollar. Okay, please give me a minute. All right. Sorry, I'm back. Please let me ask. Is everything all right? My voice, is it clear? The screen, can you see it?
Yeah, your voice
Yeah.
is audible.
Okay, so thank you very much. Let's move on. So these are the various nicknames for the major currencies that we talk about. Now let's move on to the next slide. We have the three currency letters. The letters for a currency, we have three of them. Okay, it was actually voted in 1973 by International Organization for Standardization, the ISO, and they established the three-letter code for currencies that we use today. So let's take, for instance, the New Zealand dollar. The first two letters is the country name, and the last letter is the currency's name. So let's say the New Zealand dollar. Yes, so the NZ stands for New Zealand, and then the D stands for the dollar. So let's take, for example, Ghana, we can say GHC, or some write GHS, meaning that GH means Ghana, and the S will be for city, or the C will be for city. So when we take the US dollar like we have here, the three-letter code here, the US is the United States dollar, the European, so when we take the EU, the European Union, okay, and the R stands for the euros, and then the JPY is the Japanese yen, the GBP is the Great British Pound, and then the CH is the Swiss. So and the F means what? The franc. So the Swiss francs, okay. And then the CA we have Canada, and then the Canadian dollar, the D. And for AUD we have the Australian dollar, and NZD is what we talk about. Right. So when you see the three letters, you should know what it stands for. Now let's talk of the next point: buying and selling currency pairs. We have talked about what Forex is all about. And so when we talk of Forex trading, we first define what Forex is, and we identify it being the biggest global market in the world and all that. But now we are talking of Forex trading. So get to know the difference. I've said earlier that in Forex trading, we are not trading anything but money. And we only do two things. We buy or we sell a currency. That's all we do in Forex trading. So when we say Forex trading, it's all about the simultaneous buying of one currency and selling of another. So if I think the US dollar will do better than the Japanese yen, I'll buy the dollar with, let's say, a yen. So I have a yen, and then I'll exchange yen for dollar. And when the dollar gets to a peak of my interest, I'll exchange it back to yen, and I'll make a lot of yen, and I'll make money from that. But that is different. That is for the Forex Bureau. But when it comes to Forex trading, we are not going to own the assets in terms of cash, but we speculate. Don't forget, Forex trading, what we do is that we speculate, we guess. That is what people think is betting, and they think it's gambling. It's not gambling. No, we just guess the fluctuation of the two currencies. And the one we think is going to do better, we take the position with that. And the one we think is not doing better, we trade against that. Right. So that is that for Forex trading. So when you become a Forex trader, as hopefully you be, what you're going to do is that you are going to actually check currencies, and then you look for which one is going to do better than the other, and then you take position with that, and that is all. Yes, so that is all about Forex trading. Let me open the microphone for Sugar in case he wants to speak. You're welcome, bro. All right, so when we talk of trading, we are saying that currencies are traded through a Forex broker. So as you all know, if you want to travel from Ghana to, let's say, United States, you go to the Forex Bureau, and the Forex Bureau becomes like your broker, and he will exchange your CD for dollar. And so the same way, if you want to trade in the Forex market, you need what we call a Forex broker or a CFD provider, which we call the contract for difference. And what we do here is that we trade in pairs. We trade in pairs. So we do not just trade, like I say, I trade US dollar. No, we trade currencies in pairs. So for example, we have the euro dollar. So when you go to the Forex market, we write euro dollar or the British pound yen. So that is how we write, we trade on the Forex market. We do not trade only one currency. Because don't forget, I've already said that in the Forex market, what we are doing is that we compare different currencies and we try to profit from which one is being stronger than the other. That is why we don't trade one currency. We trade currency pairs. So we call them currency pairs. So when you see euro dollar, the euro and the dollar, don't forget their nicknames. Okay, so we can just say, instead of saying euro dollar, we can use their nicknames for that. And we said the nickname for euro is the fiber and the dollar is the back. So if you are trading the fiber back or the fiber and back, you should understand what we're trying to say. And so we are saying that you are trading a currency pair. And so if you think the euro dollar will be stronger than the back, the euro will be stronger than the back, which is the dollar, you take position with the euro against the dollar. The same way, if you think British pound will do better than the Japanese yen, you take a position with the GBP as against the yen. And so we are saying simply, when you trade in Forex, listen to this very carefully. You buy or sell in currency pairs. And we are saying that exchange rates fluctuate based on which currency is stronger at the moment. And there are categories of currency pairs that we will talk about. So in the Forex market, currencies are grouped under 3 categories. Number 1, we have the major currencies. We have the cross-currency pairs. And then we also have the exotic pairs. This time, we are not just talking about currencies, but we are talking of currency pairs. Now, when we talk of the currency pairs, the major currency pairs always include the US dollar. Take note of the difference. Let me repeat that again. I said we have 3 categories of currency pairs that we trade. We have the major pairs, the crosses, which we call the minor pairs, the exotic pairs. We will talk about them later on. But when we talk of the major pairs, we are talking of pairs currencies that are paired with the US dollar. You understand why when a currency is paired with the US dollar, we say it's a major pair. Now, cross-currency pairs, which we call the minor pairs, they do not include the US dollar. So any currency pair that you see, which do not have the US dollar in it, that currency pair is a cross-currency pair, or we say a minor pair. So let's take, for example, the euro dollar is a major pair. It's a major currency pair because, you see, we have euro and dollar attached to it. And so the fact that we have in this currency pair, the dollar is a major pair. But when we look at the GBP and the JPY, it is not a major currency pair because there is no US dollar in this pair. And for that matter, this pair would qualify to be called cross-currency pair. Or we can just call it a currency cross, okay? All right. Now, when we talk of the exotic pairs, we are saying that it consists of one major currency and one currency from an emerging market. So we have already talked about the major currencies in the world, which we said there are 8. The euro, the dollar, the yen, the pound, the France, the Canadian dollar, Australian dollar, and the New Zealand dollar. If in case we pair it with any other currency, which is from an emerging market, let's say, for example, the Singapore's currency is actually strong. not in the context of being part of the current strong currencies, but rather it is from a developing country, a country that is developing in terms of its economy. And for that matter, when a major currency pair is paired with that currency, we call it an exotic pair. So, for example, we can have, let's say, the euro dollar, and then the euro paired with, let's say, the Singapore's currency. We can also talk of, let's say, South African rand. If we pair, let's say, the euro with the ZAR, the South African rand, it is also an exotic pair. And so let's look at some of the major pairs here. So when we talk of the major pairs, because when we discuss major currencies, we got 8. But in this case, we are going to pair the other 7 with the US dollar. And for that matter, we are going to get 7 major currency pairs. So listen, we have 8 major currencies, but we have 7 major currency pairs. So the currency pairs, we have the euro dollar, as you can see. Look at how we write it. Let me zoom it for you to see well. This is how you write the currency pairs. So this is euro dollar. Yeah. We have the US dollar and then the yen. And we also have the British pound. And we can also have their nicknames over there. We can say the dollar yen for the US dollar and the USD-JPY. And this one we can say the cable back or the pound dollar. Yes. We can also talk of the dollar and then the francs. Okay, the Swiss. That will get the nicknames. We can also talk of the US dollar and the Canadian dollar. These are all major currency pairs. Okay, these are all major currency pairs. So take note of them. And then we have the Australian dollar and the US dollar. We have the New Zealand dollar and then the United States dollar. Okay, so we have the Kiwi dollar, Aussie dollar, dollar loonie for Canadian dollar and the US dollar. So don't forget, these are the major currency pairs that we trade. So when you go to the forex market, you see some of these things there. And you choose which one you want to trade because each one of them has its own reactive factors. So it depends on, each one has its own way of moving. And don't forget, in forex trading, we have said earlier that we are trading simultaneously, buying and selling in the context of which currency is being stronger. So let's say US dollar is doing better than the yen. So we buy. If we think the dollar is doing better than the pound, we will sell. So I will teach you how we do it. But at least understand, I said we are doing only 2 things on the market. We buy and sell, but at least we are buying and selling in the context of which currency is stronger versus the other. Right. Now let's talk of liquidity. When we talk of liquidity, we are saying it is described, or it describes the level of activity in the financial market. So liquidity is all about, when we say liquidity in the forex trading market, we are talking of the level of activity in the financial market. So we say in forex, it is based on the number of active traders buying and selling a specific currency pair and the volume being traded. Now let me go back to this pair and tell you. So some of these pairs that we have talked about, the euro dollar, the US dollar yen, or the pound dollar, the dollar Swissy, the dollar loonie, the Aussie dollar, the Kiwi dollar, they do not all move the same way. Some are very liquid, some have higher liquidity than the others. For example, many traders go with euro dollar as being the most liquid asset out of the major pairs, followed by the pound dollar, which is also liquid than the others. So in this case, you see that a lot of traders will trade the euro dollar than, let's say, the New Zealand dollar. Some also say that the Australian dollar and the US dollar moves faster them. And so, listen to what I'm going to say. As a trader, your duty is to research the currency pairs and determine which one I want to trade with. Do I want to trade a pair which is very volatile, has higher liquidity, has a lot of traders trading that asset? So you do that research and then you go in for one currency pair and then you start trading. So we are saying that the more frequently traded something is, the higher its liquidity. And so, like I said, if a lot of people are trading the euro dollar, it means the euro dollar will be very volatile and it will have higher liquidity than the other pairs. And for that matter, those who trade that pair will get a lot of money than the other pairs. This should be very clear with you, because let's take, for example, when you go to our normal markets, you see some, let me say, those of you have been selling or at the market, you know, some of the items sell faster than others. So, for example, if you go to the market women who are selling, let's say, tomato and pepper, they will tell you that, oh, for tomato, it goes well, but 2-3 days, you see the vegetable begins to corrupt, and so it is not a valuable asset to invest in. But pepper, you can even dry it. So pepper has, you understand what I'm trying to say? And so the same way, though we trade a lot of pairs on the currency market, but people go in for something, some of them much than the others. And for that matter, some of the pairs will have higher liquidity than the others. And the higher the liquidity, the higher you can make profit from that asset. Because some pairs, because people are not buying and selling, in a day, you realize that it's not moving faster. But some pairs, because a lot of traders are into that, you realize that in a day it can move very faster and very volatile because of its liquidity, and it can make you a lot of money. So compare that to the normal market and you understand what I'm trying to say. And so we are saying that, for example, more people trade the euro dollar currency pair and at a higher volumes than the Australian dollar currency pair. This means that euro dollar is more liquid than Australian dollar and then, or let's say the Aussie dollar. Okay. Now, when we talk of major cross currency pairs or minor currency pairs, I said that the minor pairs are pairs without the US dollar attached to it. So I shouldn't waste time here. You see, I explained it earlier. If you have the GBP JPY, you see there is no USD in it, and so it is a minor pair. So that is it. And I'm saying that time will not permit me to talk about all the currency pairs in the world, but you can read and research into that for your own interest. And also, we also have the exotic pairs. And the exotic pairs, I said, they are pairs they are currencies that are paired with the major currencies. So when you see a currency like that, you understand what it means or where it's coming from. So far, I think you'll be able to identify major pairs, minor pairs, and exotic pairs. So when we talk of exotic pairs, we can talk of the G10 currencies. You can go and research into that. Those of you who have been reading Baby Pips as I gave it to you, that website will explain G10 currencies, the Scandi, the CEE currency, the BRICS Plus, and just I'm trying to say that there are hundreds of currency pairs in existence, but not all can be traded in the FX market. All right. So let's move on. Let's go look at something beyond Forex. Listen to this. While Forex trading focuses on currencies, the same technical and fundamental analysis skills can be applied to other financial markets such as the stocks, metals, and indices. And we are saying that traders often diversify their portfolios by trading these assets to take advantage of different market conditions and economic events. What am I saying? I'm still comparing to the normal market. When you go to the normal market, we have those who are selling only vegetables. We have those who are selling only like, let me say, the provision stores. You know what they sell. We also have those who are selling only dresses and all that, something like that. Some are also selling maybe car parts. And you can see that even in the market, we do not all sell and buy and sell one thing. We have different things. So we have different markets. Okay. So when we come to the trading industry, don't forget, when we started, I told you that we have different exchange. So we have the forex market as one part of it. We have the New York Exchange, the stock exchange, and all that. Okay. The same way when you come to trading, it is not only forex that we have in the world. We also have other places or other markets that you can trade. So some of the markets that we have, let's say, the stock market. When we talk of the stock market, we say it represents ownership in a company. So let's say for Ghana, we have MTN, we have, let's say, Unilever company, we have other companies available. So I can invest into that. They have their stocks over there. I can buy some. And for that matter, I'm buying a share in that company. Yes. And so when you come to the trading industry or the stock market, you can find something like well-known companies like, let's say, Apple, Microsoft, Amazon, Tesla, Nvidia, and all that. Other companies, at least these are just a few examples. So we trade them on the stock market as well. And with the same technical and fundamental analysis we use for trading forex market, we can use the same thing to trade the stock market. And so you see, learning the technical and fundamental analysis of forex trading, you can apply the same idea to trade other markets. The same way, aside the stock market, we can also talk of the metals or the commodity market. So there, we can also talk of, let's say, gold. Yes, people are let me say, what should I do? In our country, people are digging the ground to get gold to sell. But for traders, we can also trade gold online and make money. So we do not have to go and dig the ground, okay, with excavators and all that to risk our life under the ground. But we can also trade with gold online. It is also an asset that we trade, okay. Aside metals, we also have the indices, okay. When we talk of indices, we are talking of we track the performance of a group of stocks, okay. So we can combine several companies together and see how they are performing, and they have put names on that. So, for example, we have the S&P 500. Here we talk of it tracks the 500 largest U.S. companies. So we have compiled 500 companies in the U.S. and how they are performing, and then we call them the S&P 500, and you can trade that as well. We have the NASDAQ, talking of the top 100 U.S. technology stocks, and we have put all of them together as one. We have the Dow Jones or the US 30, and we also have 30 major US companies. So you see, out of the 500, we have scaled down to 30 to call them the US 30 or the Dow Jones, okay? And we also have the FTSE 100 or the UK 100. So when you go to the US, we also list top 100 UK companies, and we also trade on their performance. And we also have the DAX, when we call the Germany 40. We talk of the largest 40 companies in the German. And then we can also trade on that. Aside the forex market, the stock market, the commodity market, the indices or the stock market, we can also trade what we call crypto asset with the same technical and fundamental analysis. And examples of crypto asset that we can trade the Bitcoin, we can trade Ethereum, we can trade Shiba Inu, we can trade the Luna, the XRP, and all that. So we have a lot of crypto assets. And you see, learning the scale of trading is universal because you can trade on any market with the same idea. It's very, very interesting. Again, the forex market size and liquidity, we have already said that the size of the forex market is bigger than any other market in the world. So the forex market stands higher than all the other exchanges in the world, if not even the stock exchange. All right. And you are saying that the forex market is considered as over the counter due to the fact that the entire market is run electronically within a network of banks and non-bank financial institutions. So you see, the forex market, that is why we say it is decentralized. We do not have just one country or one government organization managing the forex market. So this is why we said it is decentralized, because it is interconnection, or that's why we say it is an interbank market. Interbank market. So understand it. And we're saying that it means that the FS market is spread all over the globe with no central location, and trade can take place anywhere as long as you have an internet connection. So you see, trading is very interesting. If you want to become a trader, all you need is your computer, your phone, and then your maybe your iPad or anything you think you can use to view the screen. And then you get internet connection, and then you start trading. It's very simple. We say that let's look at the chart here. So you can see that the chart below shows the 7 most traded currencies in the world. So you see, this is why we said the US dollar, when paired with any other currency, is called a market currency, because you see, the US dollar is the most traded currency in the world. A lot of people invest with the US. And a lot of business transactions in the world are all conducted with the US dollar. And many of the world's economy or countries with strong economic government, they all have the US dollar as their reserve. And that is why the US dollar when paired with any other currency, it is called a major pair. And we are saying that what of the IMF, the International Monetary Fund, the US dollar comprises roughly 62% of the world's official foreign exchange reserves. So you can see, as we have here. So according to the IMF, a lot of countries have the US dollar as their reserve. And that is why the US dollar is the king of currencies. And you see, foreign exchange reserves are assets held and reserved by a central bank in foreign currencies. And he has said that because almost every investor, business and central bank owns it, they pay attention to the US dollar. So that is why the US dollar is king. Now, we are saying that there are also other significant reasons why US dollar plays a central role in the forex market. Let's look at some of the reasons. We are saying that the United States economy is the largest economy in the world. And so that is why a lot of people trade the US dollar. The US dollar is also the reserve. Let's move on. So some of the reasons why the US dollar is traded than any other asset. Again, let me say there are a lot of reasons. Okay. Besides speculation in the forex market, we said that the main function of the forex market is to transfer funds from one currency of a country to another currency. So when we are trading, because we buy a share in a certain currency, you see that there's that kind of transfer, and it provides short-term credit to finance trade between countries, and then it's also to avoid or hedge against foreign exchange fluctuations from when a transaction is initiated and when payment is received. Let's say you are an importer, okay? You import goods from, let's say, the US to Ghana, and when you bought the goods in US, and as and when it arrived in Ghana, that currency fluctuation can affect your business. Remember, that is why we have the hedge funds. That is why I told you to go and read about the hedge funds. So for hedge funds, what they do is that they always try to avoid a huge fluctuation of price of currencies, so that as of the time a transaction is initiated to the time of payment received, the price or the movement of price will not be so serious to affect someone's business, or not, So that's why we always go with the major economies in the world. All right. Now, when we come to the forex market, looking at how to trade forex market, you see, we have so many ways of trading forex market. We have the futures market, we have the options, the ETFs, we have the spot FX. So if you are a currency trader, you have a lot of options. So you can go to the futures. Futures is all about trading contracts, okay? And futures is mostly traded in the crypto markets, okay? The crypto market, we trade with futures, okay? And then we also have the options. So a lot of them. But for currency traders, we focus on the spot FX. And even under spot FX, we have the retail forex, the contract for difference, and the spread bets. Right. And so we have different ways of trading. So as we go on, I will show you how we do it. So now let's look at how to make money trading forex. I've said earlier, and I think I posted it on the platform, that if you are a trader, you are ahead of being a millionaire. And so please, sorry, my screen was off. So let me share the screen again. All right. Let's move on. So let's look at how to make money trading forex. You can be a millionaire in a few years. So I encourage you, my friends, if you have decided to become a forex trader, please put in the hard work. Forex trading can make you rich, but it is not a quick scheme. It's not going to be tomorrow, 1 month, or 3 months. No. It takes time. But if you put in the hard work, one day you will win. I think at least I've put some videos on the platform. If you watch them, it will encourage you. Good. Some, it took them 8 years, some 7 years, some 5 years. But probably it may be that they did not have a good mentor to help them. So they did it all by themselves. That's why it took them too long. But if you are learning like we are doing here, and how I have structured this kind of learning for you to navigate your way to success quickly, I think it will help you a lot. Now, I have a lot of plans ahead. So if you follow carefully, as time goes on, being a team trader, I am telling you that within a few years ahead, you can start cashing out from the forex market and you are on your way to financial freedom. All right, let's move on to how to make money trading forex. They are saying that the objective of forex trading is to exchange one currency for another in the expectation that the price will change. Basically, that is all about forex trading. So you are going to trade with the expectation that, okay, today I think the US dollar is going to be stronger than the Japanese yen. And for that matter, let me buy a share in the dollar. And if your guess is right, that's why we say it's speculative game. If your speculation goes right, and then indeed by the close of the day, or let's say you predicted for a week or a month or a year, if it goes in your way, then it means you're going to make money in that direction. So we are saying that more specifically, the currency you bought will increase in value compared to the one you sold. An exchange rate is simply the ratio of one currency valued against another currency. Right, now let's move on to how to read a forex quote. currencies are always quoted in pairs, and we have said that already. So we do not trade just one currency. I'm trading US dollar. No, we trade currency pair. Like we have the pound dollar here or the dollar yen. So we said the reason they are quoted in pairs is that in every foreign exchange transaction, you are simultaneously buying one currency and selling another. So you do not just buy a currency and that's a no. You buy one you think will be stronger than the other, and then you sell one you think is being weak. So that is how currencies are. So that is why we also trade currency pairs instead of just a currency. So the question is, how do you know which currency you are buying and which you are selling? And this is an excellent question. So this is where the concept of base and code currencies come in. So let's quickly look at what we call a base currency and a code currency in context of currency pairs. Okay. So when we talk about currency pair, we have the base and the code currency. Now, when we look at the pair we have on the screen, let me enable editing to edit this one. I think there's a mistake over here. Let me edit this, please. Okay. This a minute. All right. Let's move on. So, when we look at, let's say, the pound dollar we have here, we are saying that for the pound dollar, the pound is the base currency. The pound is the base currency. And then the US dollar is the code currency. So anytime you see a currency pair, the first pair is, or the first currency is the base currency, and the second one is the code currency. So in this case, let me quickly go back and let's look at this. So when we look at this chart, you see the euro dollar. In this case, euro is the base currency, and then the dollar is the code currency. Sorry, the screen is off. Let me share it for you, please. So in this case, I'm talking about, let me go back. I think the screen was off. So let me take the base and the code currency again. What we are saying that we have the base currency and the code currency. So we said we trade in pairs. We do not trade one currency in isolation. So anytime we are trading, we look at the currency pairs, and then the first currency we have here, we say is the base currency, and the second one here is the code currency. So anytime you see a currency pair, the first currency is the base, and the second one is the code. So let's take, for example, if we have the euro dollar, the euro is the base currency, and the dollar becomes the code currency. So when we go back to the chart we had earlier, this one, in this case, the dollar Swissy, the dollar becomes the code currency, the base currency, and the Swissy becomes the code currency. And then the dollar loonie, that is the US dollar and the Canadian dollar. The dollar here is the base currency, and the Canadian dollar is the code currency. Right. Let's move on quickly. Okay, so that is that for the base currency. Now, we are saying that in the example above, you have to pay. So whenever we have a pair, like the British pound, we always give you the price. Now, we have 1.21228. That price over there tells you that you pay $1.21228 to buy 1 pound. In this case, it means the pound is stronger or is higher in value versus the dollar. So we say that if you want to buy the pound, you use 1.21228 to dollar to buy the pound. It means that if you are in the United States and you are traveling from US to, let's say, Britain, you exchange $1.21228 for £1. So that is that. So as a trader, if you are trading and you take a trade for this, let's say a buy, then you expect that this price we have here will go higher than it is now. So let's say we have 1.21228, but now we can have, let's say, 1.21, let's say 40 or 408. And in this case, see the pound is being stronger than the US dollar, and so you take a buy. So you say that you'll buy the pair if you believe the base currency will appreciate. If you think the pound here is going to be stronger than the dollar, you buy. But if you think the pound is going to be weak as compared to the US dollar, and you think the dollar will be stronger than the pound, you sell. Because don't forget, we said trading is all about, as a forex trader, what you're doing is that you are taking a position of the currency which is being stronger versus the other which is being going to be weaker. And so if you think the pound is going to be stronger than the dollar, you buy. But if you think the dollar, in this case, as base and quote currency, if you think the quote currency is going to be stronger than the base currency, you sell. Please listen very carefully. Let me take it out again. If the base currency is going to be stronger than the quote currency, you buy. So now base currency is the GBP, and so if the US dollar is going to be weak, we buy. If the quote currency is going to be stronger than the base currency, we sell. So that is what we do in the forex market. Thank you very much. I believe it's clear with you. Now, when you buy is the same as going long. And sell is the same as going short. And if you don't take any trade, we say you are flat. Or if you are in a trade and you close the trade, you go square. Okay? Yes, so that is also when you come to the forex market, you see, we are learning how you can trade. So when you come to the forex market, and then let's say you trade a British pound, like me, my favorite pair is the British pound. I trade British pair for over 1 year now. It's the only pair that I trade. I only trade British pound. I don't trade any asset. Okay. And so what I do is that when I come to the market, let me try if I can show you the market. Okay. Let me see. Let me see. It's not analysis that we're going to do, but I just want to show you something on the market, on the live market. Okay. So if you become a trader, that's what we're going to do. Let me quickly show you something. So as we wait, please. So let me take that again, that if you think pound, which is the base currency, will be stronger than the dollar, which is the quote currency, you buy. And if the dollar is the quote currency, which you think is going to be weak, to be stronger than the base currency, you sell. Right. So buying does not necessarily mean you're going to get the British pound in your pocket as an asset. Or selling does not necessarily mean that you have exchanged dollar for pound. No. You are a speculative trader. Okay. So take note of that. Let me share the live market with you. So this is what we are going to learn. Okay. This is what we are going to learn. So this is an example of the live market. You see, when you come to the market, like I see, I have the currency pairs here. The pound is here. The US 30, like I said, the gold is here. The US 100. We have the S&P 500 is here. JB, dollar yen is here. And then we have another cross currency. The cross currency or a minor pair. The pound Canadian dollar is also here. And then we have the pound yen, which is also a minor pair. So if, according to my analysis, I think GBP is going to be weak as compared to the dollar. So dollar is going to be stronger according to my analysis on the screen. So dollar is going to be stronger than the pound. And for that matter, it means this week I am going to expect a sell trade for this pair. Okay. So basically that's what we do. So when we come to the market, we have the candlesticks there. You see, you do all your analysis and you think that, according to my analysis, GBP has been stronger since the beginning of the year till now, and I think now the dollar is going to take over, and so the GBP is going to lose its value to dollar. Dollar is going to be stronger than the pound. And for that matter, I would rather take a sell position than a buy position. So that is that. Let me share it back to our lesson. Okay. So this is how we trade the forex market. Okay, this is how we trade. All right. And so if you buy, you are long. If you sell, you are short. Okay. And if you have no position, you are saying that then you are flat or you are square. And when you close a position, you have squared up the position. Okay. So let's say, like I said, you come to the market and you think GBP is going to be stronger than the dollar. You take a buy position, so you go long. Okay, you click long. You see, all that we do on the forex market is all about we click a buy or you click a sell. Very simple thing that we do. But before you can click a buy or sell, you need a lot of information in your head. And so forex trading is all about getting the right information in your head to execute the right order. So if it is just buy or sell, you're going to click. But before you can click the buy right, before you can click the sell right, you need that information. Good. Let's quickly move on to the bid and the ask and the spread. Now, if you have ever been to the forex bureau, you know, when you go to the forex bureau to exchange your, let's say, CD for dollar, because you want to travel from that to US. What the broker will do is that the broker will say, okay, you have a CD. I have a dollar. My $1, I will take 17 CDs from you. I listen. I'll take 17 CDs from you, and I'll give you $1. But when you come from the US and you want to exchange your dollar for CD, he will say, I will give you 16 CDs for $1.
Bro.
Hello?
Yeah, and that's all.
Yeah, you're moving too fast. Maybe you have to slow down.
And that's all.
Yeah, I said that you're moving too fast.
Okay. Thank you.
I don't know whether you have pressed the speed button yet.
No, I'm not playing any speed button. Maybe my voice is going faster. All right, forgive me. Is that okay? All right. Okay, let's move on. Okay. So I'm saying that when you go to the forex market, the brokers, okay, Mr. Collins, I'm listening. Mr. Collins, anything to say, please? Let's move on. When it's ready, maybe you will speak. So we are talking about the. Let me give you a blank slide, and let me write this. Let me put this here. Okay, let me make this part. Okay, let me. So let's say you go to the forex bureau, okay? At the forex bureau, you have two prices. One is called a bid, and one is called the ask price, okay? Ghana cedi. And so when you go there, the broker will tell you that, okay, you need 16 point, let's say 17 point, or okay, let me come down, 16.5. Or let's say 17 cities. Let me flat run the number. 17 cities to buy. So when I write something like this, it says let me increase the font size. Okay. All right. So they always, the broker will give you two different prices. Okay. Okay. So the Forex Bureau will tell you, oh, if you want to get a dollar, I will take 17 cities from you. Okay. And if you have a dollar and you're asking for a city, the Roman or the broker will tell you, I'll give you 60 cities. And you can see that his buying and selling price is 1 cedi. And it will be that anytime 1 cedi, $1 is exchanged at his end, he is making $1 as profit. Right. Let's go back to bid and ask. So we are saying that in the Forex market, bid is the price at which your broker is willing to buy the base currency. Okay. So that is the amount your broker is willing to pay. Are you following? So the bid is the price at which your broker is willing to buy the base currency in exchange for the quote currency. So in this case, we have the euro dollar. And for that matter, the euro is the base and the dollar is the quote currency. And the bid is the price at which your broker is willing to buy. So it means you are selling to your broker and he's going to buy. Okay. And then they say that this trader can sell to the market. So if you want to sell something, the broker will buy it from you. So now, when you come to the market, anytime you take a buy trade, the broker happens. A trade cannot take place when we don't have anybody buying against your trade. So anytime you take a buy trade, the broker will take a sell trade. Okay. So at the end of the day, the direction of the price will tell who wins. And nobody's going to receive any order. Okay. Again, the ask price is the price at which your broker will sell the base currency in exchange for the quote currency. So the quote currency, you will buy the quote currency from your broker and your broker will sell it to you. So now, when you look at the values here, you can see that the sell value is higher, less than the buy value here, or the buying price. So the selling price is less than the buying price we have here. So you see, for this particular example, we have 1.34568 as the buying as the selling price, and then the buying price is 1.34588. All right, and you can see some 2 on top here, and that 2 is what we call the spread. That's the difference between the buy and the sell price values that we have here. And we are saying that whenever you take a trade, your broker will take an opposite trade with you. And so that is it. And so anytime you go to the Forex market, that is what we do. So let me show you an example. Anytime you go to the Forex market, that is what happens over there. So from the chart that I showed you, what is it? What is that? I think that one is up. Let's move on. Okay. And so that is it for bid and ask price. And we are saying that the difference between bid and ask price is known as the spread. And so that is what we have here. The two we have here is the difference between the two. So we should take note of that. And we have said that. So on the euro dollar example that we have, you can see the spread is 2. So if you sell euro dollar, you click sell. And you will sell euro dollar at this price. So when you are selling, it means your broker is going to buy from you. So when you click this sell, it means you are in a buy position, or you are selling the US dollar, which is the quote currency, because you think the dollar is going to be stronger than the base. But if you buy, you think the euro is going to be stronger than the dollar. So that is it. And that will give you the spread, okay? And the spread is going to be the difference between the bid and the ask price. All right. So let's look at this example. So the base currency we have here is the euro, and the quote currency we have here is the dollar. And this is the two price differences that your broker will give you. So he says, if you want to take a trade or a buy, or you want to go for a bid price, you want to buy. So it means bid is for buy and bid is for sell and ask is for buy. If you want to buy, you go for the ask price, which is 1.1053. So you will buy at a higher price from your broker. So the base currency goes with the ask price, and the quote currency goes with the bid price. And so your trade, you will take, let's say, a buy trade, thinking the euro will be stronger than the dollar. And so your broker will say, okay, you buy at 1.1053. And if, let's say, at the end of the day, your trade goes well, and your price move from 1.1053 to, let's say, 1.1060. In this case, you are in profit, and you will sell back, because you are in a buy position. You will sell back to your broker, and your broker will buy it at a lower price from you. That is how they make money. And so the difference between the bid and the ask price. So bid is for a sell position, and the ask is for buy position. The difference will give the spread. And this is how the brokers can also profit from rendering their services to you. Good. Again, we say, let's look at how to know when to buy and when to sell. We are saying that Forex trading involves trying to bet on which currency will rise or fall versus another currency. And I've given you several ideas of how to know it. And so in trading, we look at the supply and demand for a currency due to various macroeconomic factors, which can drive currency exchange rate up or down. All right. Is anyone talking? Okay, let's move on. So when you come to the forex market, let's say, for example, we have the pair euro dollar. We are saying that the base currency here is the euro, and the quote is the dollar. So we are saying that if you believe that the US economy will continue to weaken, which is bad for the US dollar, you would execute a buy or on euro dollar order. Okay, so it means you take a buy trade for euro dollar. In this case, you are saying that the US dollar, the euro is going to be stronger than the dollar. And by doing so, you are saying that you have bought euros with the expectation that it will rise versus the dollar. And you also say that if you believe the US dollar is going to be strong or stronger than the euro, okay, let me say, if you believe that the US economy is strong and the euro will weaken against the dollar, you will execute a sell trade. And that is it. And by doing so, we are saying that you have sold euros with the expectation that it will fall versus the US dollar. And so that is how we trade with buy with the base and the code currency, and also we have also looked at the bid and the ask price. Please don't be confused at all. It is nothing difficult. When you start trading, you will not bother yourself with this. But at least as a mechanical state trader, you need to know all these things because it's very, very important. For example, if the spread is very big, as we move on, you realize that in under certain situations, the spread will be very big, and in that days we don't trade. But we always look for assets with tight spread. That means spread that are very small. And when you see the spread is very small, it means a lot of traders are buying and selling that asset. And that it means there's high liquidity on it. And it means you can also make a lot of money on that. But when you see the spread is very big or it keeps widening, it means that a lot of people are taking profits and they're leaving that asset or the market. And so you have to also don't trade that. Asset. Otherwise, you give your money back to the broker. All right. Let's move on to lot size. Okay. In trading, when we say a lot in trading, you say that you just can't buy less than €1. No, we don't do that in trading. So we buy in lots. In lots, it's like, let's say, when you're going to buy an egg, you see a crate of egg, a dozen of something. You see, so we trade with lots. And the lots, we have different lots. We have, let's say, the micro lots. Micro lot, it means you are buying 1,000 units of that currency. When we say mini lots, it means you are buying 10,000 units of that currency. We'll deal this in detail. Slot, you are buying 100,000 units. Standard lots, you are buying 100,000 units of that currency. And depending on your broker and the type of account you have, more or lot later is. You do a lot of lots later. So your broker or your capital will determine the amount of lots you can buy. Okay, right. And again, we also have a margin. Margin is all about the capital we trade for the money. So when we say margin trading lets you open large position size using only a fraction of the capital you have. So I don't want to bother you much because you're saying that you conduct relatively large transaction with a small amount of capital. So that's margin. So margin is how what we trade in the first market. So the capital, okay. So we'll deal with this in detail. So let's move on. And then we say rollover. You see, remember I told you that forex trading, the market is open from Monday to Friday, but there's always a closing and opening times. And so when we close a trade or the market for this day, it will have to open for next day. And when it opens and we're in a trade, there's a rollover. So let's say you take a position today, which is let's say tomorrow, Monday, and you didn't close your trade, thinking that the position you have taken is going to do better tomorrow, and you are still in the position. The market closed for Monday. Your broker will have to roll over your trade from Monday to Tuesday, and you pay something what we call that is what by a swap fee. You pay a swap fee. So your trader, your broker is swapping your assets from Monday to Tuesday or Tuesday to when you got order, and then you pay something. There's going to be a fee. So you decide whether you want to let your trade go the next day based on your own analysis and something like that. So rollover is something like this. So you took a trade for the one, and you think that, oh no, today I think my pair will do much better tomorrow. So let me leave the trade. So you leave the trade. So when and by taking your orders from day 1 to day 2, we also got the rollover. The rollover. We are almost done, so please. And again, in trading, we profit from what we call PIP or PIP, which we call a percentage. Okay, so when you say pips or points or pipettes, or lot or whatever, don't be confused. Okay, so let's say we have this pair. So let's say if one moves from, let me use this one. If one moves to trade, in this case, you are in two. You have gained 2 points. Okay, you have gained 2 points. So we are saying that if euro dollar moves from 1.105 to 1.1051, that is 0.0. $0.001. It means US dollar rise in value. The rise in value is 1 pip. From, you see the difference, just the language. And that change is what we call a pip. And most pairs go out with a Forex market. So, but there are some exceptions, like the Japanese yen, it goes with you go with 2 decimal places. So you take note of them. So, for example, like we said, a pip, if we have a GDP asset and GDP will show, let's say 1.3 0.542 to 1.30543. It means we have moved 1 pipette or a hand. So that's that. Okay. So when it moves from, let's say 2 to 3, it means you are in a, let's say, a buy position for GDP. That means you are in profit. Right. And now let's look at this. We have said earlier that most of the pairs have 4 decimal places, except the yen pairs, which have 2 decimal places. And so if, let's say, you have 2 at last point, when you take a trade and then it moves from 0 to 2, it means you are in 0.2 pips. You have made 0.2 points or pips. But if it moves from 0 to 8, it means you have 8 points. If it moves from 0 to 3, it means, let's say you have 0, this one is 38 points. When you come here, you have 538 points. When you go here, you have 1,538 points. So if you take a trade, let's say, and your trade moves from, let's say, 38 to, let's say, 40, it means you are in 2 points. If it moves from 38, let's say 50, it means you're in 22 points, 12 points. Okay. So in that order, they're very simple. Okay, very simple. And you can simply calculate that. I wouldn't bother you today because for quick calculation, today, so I wouldn't want to bother you this evening. Time is fast spent. You have been here for too long. So you can use calculators to do that. So we have pips calculator over there, and you can just go online to Baby Pips and you get Pips calculator to do your calculations on her. Okay. So let's hurry up and close there. Now, when we talk of lots, I've already said lots. We have these are how we take trades in Forex. You see, we cannot just take a trade like, let's say, €1. No, we can't just do that. So we take trades in let's say, lots, and then we have lots like, let's say, the nano lot. When you take a trade with a nano lot, it means you have bought 100 lots in that asset. If you take a trade with the micro lot, it means you have taken 1,000. You have bought 1,000 lots in that asset. When you go for the mini lot, it means you have bought 10,000 lots. 10,000 units of that asset. And a standard lot, it means you have bought 100,000 units of that asset. Very, very simple. Okay. But when we start trading, I will teach you all those things. Very, very simple. So don't worry at all. All right. Okay, so I said we have the pips calculator over there. So I only want you to do all these serious calculations today. So later on, you can go to baby pips, or you can check online for any pips calculator and to calculate your pips for you. So it's so simple. Let's say let me share the screen. I think the screen is not showing. Please, we are done. If there's any question, you can open your microphone and ask. If there's any comment you can bring it up for discussion, and then we close. Time up. So, thank you for today. We said we are going to look at all of these things for today for Mechanical Stage Lecture 1. What is Forex and how do you treat Forex? And I think we have discussed a lot. So, I'm done for today. If you have any question, you can ask. Thank you very much. You can open your microphone and talk.
Hello.
So please, I'm listening.
Yeah, thank you very much for this insightful lecture. Later part of your presentation, you were talking about loss, and that time my network was not stable. So if you can use a minute to go over again for me.
All right. So lot size is so simple. We are saying that we cannot just trade, let's say, by buying €1. We can't do that in Forex trading, And so that is why we said we trade in lots. And so for lots, can you see my screen? So can you see my screen?
I can see.
Okay, so when we talk of lots, we have the standard lots. When we talk of standard lot, it means when we are going to take a trade, you go with okay, let me show something to you on my phone. Let me share the screen from my phone and you see. Let me show it on my phone. So basically what you are saying is that when you are taking a trade in Forex, it's so simple. You are just entering, let's say, the lot is all about, like let's say when I go to buy an egg, you have crates of egg, okay? You can't go to the supermarket and buy just one egg. So in Forex trading, we have different lots that you can buy or sell. So when you're taking a trade, you go with a standard lot, a mini lot. Standard lot means you are buying 100,000 units of that asset. Mini lot means you are buying 10,000 units of that asset. And micro lot means you are buying 1,000 lot units of that asset. And the nano means mostly, well, some people trade with the nano, but I've not seen them yet. And you can take a trade with any of these lots, depending on your capital, the margin you are trading with. Yes, so maybe that's a little I can say. We will deal with lots later, but this is a little I can say about lots. Is that okay with you?
Thank you very much. It's
Thank you.
well understood.
Welcome, though. Okay, okay. Any question? If you want to talk, please open your microphone and let's talk. Anyone willing to talk? Mr. Eben, please, you can talk. Mr. Eben, you can talk. I'll open your microphone for you. I believe the silence means everything is okay, right? All right. Thank you very much for today's lecture. I recorded it. I'll try if I can post it on YouTube for your perusal. Later on, you can go and watch it for further understanding. But I would encourage you that make sure you read from Baby Pips as I gave it to you. In fact, let me comment on this. You know, Black people, our interaction on the platform is not that strong. I don't know why somebody will join a platform and not be active. I believe you all joined hoping to learn something. But when I put something and I check the views and the reactions, you realize that a bunch of some of the students there, you are not cooperating at all. Even though for me, I'm not discouraged at all, but I think it won't help you. And if you continue like this, you rather waste your time being on the platform but not learning anything. You know. And so I would encourage you that please be active on the platform. Don't just be a passive reader or something like that. There are certain things maybe I would expect you to write a comment. That is why I've added a chat button, a chat page to the channel, you know. So when I post something, be active on the platform. If you want to learn and become a Forex trader as you hope for, be active on the platform. Whatever I post, you check. And there's a thumbs up, a fire emoji, or anything emoji that you think you can use for your comments. You can just do that, at least just to help me know that you are active. Right. Thank you, my friends.
Thank you very much for your time.
Welcome, bro. Mr. Collins, are you around?
Yes, I did here.
Okay, thank you. So my colleagues, please, Mr. Collins is a friend and then he's also a trader. So I love to introduce him to you too. Probably maybe one of the days, if I'm not around, he may teach you. So I have to introduce him to you. Okay. Mr. Collins, do you have anything to say?
Oh, like for now, today's lesson was very educative. Most of the things, like from you, I didn't even get an understanding that way, or maybe I forgot a long time.
Sure.
So, truly speaking, I've learned a lot today.
We thank God for that.
Yeah.
In fact,
But
like I said earlier,
okay,
Mr. Collins, talk.
yeah, I understood your explanation on the buy and sell.
Yeah.
Yeah, but the like what I also want to add up is from where you were coming from, that is how forest should be. Like forest should be. Yes.
True.
So, but on the charts, the simple way for the buy, as you explained, if you expect the graph to go up or the price to go up, it is buy. And if you
Yeah.
expect the price to go down, it is sell. But another way
True.
you can somebody may be confused with the selling from the fact that before you sell some pounds, it means you must have you must have bought the dollar or you must have the pounds in your pocket, right? Yes, but this one, the sell is just an indication, like a direction, to show that
Yeah.
uh, the the quote currency, right? The quote currency is stronger than the base currency,
Yeah.
which means the sell,
Exactly.
you are just indicating the fact that the price is going down. That is all. And the buy,
Yeah.
you are expecting the price to go up. You don't have to have some pounds in your pocket or some currency in your pocket before you can do that. But it is just an indication of direction in the market.
Yeah. Thank you very much, bro.
Thank you too.
So, like I said earlier, as a forex trader, we are we speculate. We speculate. So we are not actually trading the assets at our disposal. So it is not like those who go to the forex bureau and then exchange physical cash. No, we are trading digital assets. Okay, we are trading digital assets, but even not necessarily that being a digital asset, you are going to own the asset by yourself. It's not like crypto. You see, when you are trading on the spot market like crypto, when you buy a Bitcoin, you get Bitcoin as an asset. But it is not like that when we are trading forex. We are not going to own anything. We speculate on price, and you and the broker decide. Okay, for me, the trader, I think GBP USD in this week, the British pound is going to be weak, and the dollar is going to be stronger. For that matter, I want to take a sell position. Then your broker will say, okay, if you think GBP USD is going to be, I mean, if you are going to take a sell, then me, I will take a buy. And for that matter, you have a trade. You see, there wouldn't be any trade, a trade, and there's no opposing trade. No. That's why we are saying it's not gambling. Nobody is there to steal from you. Anytime you take a trade, there's going to be an opposing trade. When we compare the two, or when we put the two together, that's when. So that is why trading is all about getting the right information. And with the right information, you can execute your trades professionally to make a lot of money. So that is that for today. Did anyone here want to talk?
Yes, I want to ask something, but
I think Mami could not want to speak, right?
yes,
Your voice is too low. Can you amplify it for us?
okay.
Come closer to your microphone for me, please.
Okay, is it better now?
Very
Very,
good.
very, yeah.
You can talk.
I-
Mommy, you can talk, okay?
Because definitely that's the basis for which you
Come
are
again.
trading this whole thing. So say like I mentioned that here you don't use currencies, maybe a CD or something of that sort, but then you buy lots. So the lots that you're
Yeah.
buying, it's not the money in your account that you have used to buy the lots and for which you are using to trade. I'm kind of confused when you say that you don't money in a account.
Yes. You know, you don't own anything in trading.
Right?
When you are trading, Are, are you
Please,
okay? Can I talk?
is my question well understood?
You come again. You come again.
Okay. So that's the question I was asking.
Mm-hmm. If I heard you right, you were talking of the lot size, right? And you were asking the question that why is it that when you take a trade, you don't own anything? Is that not what you asked?
Sorry, come again, my network.
Okay. I'm saying that if I heard you clear, you were saying like, why is it that when you take the trade, you don't own the thing? Is that what you mean?
I think what she was trying to say was the lot size. She's confused with the lot size and the money in your account balance.
Okay.
Yeah. So according to her, what she was trying to say is, in case we are talking about buying in lots. So how
Mm,
does it relate in funding your account like to buy with a dollar or something?
I'm not getting it clear.
Yeah, she was saying uh, right now you are talking about we buy in lots, right?
Uh-huh.
So if we buy in lot, like where is she going to get that lot? Use money
Ah,
and convert it to lot size to buy a particular
okay.
volume in the market. Yes.
Uh, Mommy, is that what you
Evelyn, I
wanted
hope
to
that's
know?
what you meant, right?
Yes, yes, yes.
All right, very simple. When you go to the market, okay, okay, you don't worry at all. When we get to the analysis stage, okay, we will start taking trades and you see how simple it is. But for now, what I would say is that you do not have to go and buy something somewhere and bring it onto the market. That is why we are saying that to trade on the forex market, you need a broker. Okay, and so your broker will give you the things you're going to use for your trading. And so, for example, you will have to just deposit the money on the platform, and based on the capital you have in your account, your broker will help you to know the lot size you can trade. But you have to do the calculation. For example, let's say I have $1,000 in my account. Uh, with $1,000, I can do some calculations and trade, let's say, 0.1 lot, meaning I can buy 10,000 units of the asset. And so when I'm going to trade, I'm not going to enter, let's say, 100 because I have $1,000. I will just risk $100. So I will just take a trade with 100. But I will use the lot. Okay. And when you want to enter a lot size, there are some values that we use to enter a lot size. So, for example, we said a standard lot, you are buying 100,000 units of that asset. And instead of entering, let's say, 100,000, you enter one. And when you enter one, your broker will do the calculation and take a margin. And you see, when we say a margin is the capital. And so the amount that your broker is going to set aside to execute the trade for you. And so when you enter that one, it means you have entered one lot size. And with that one lot size, 100,000 units, your broker will do the calculation and then he will take the margin from your balance to open the trade for you. With another thing called leverage. We'll talk about leverage next week, God willing, when we meet next week. Or let's say if you take a trade with a mini lot, which is 10,000 units, you will enter 0.1. This is what I wanted to show you, but you see, I think I didn't get. I hardly take screenshots of my trade. Let me check if I can get some to show you on the platform. I hardly take trades with. Hardly. I hardly take trades with screenshots. Let me see if I can get some for you. So you are not going to get any money from anywhere to do that. But when you deposit on your account, your broker will help you with the lot size and all that. And so it is very easy thing to do. Okay. Mm-hmm. Is it clear with you?
Yeah, it's fine.
All right. All right.
Yes. Thank you.
You're welcome. 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 In fact, you will be confused at this level, and it is possible, Mr. Collins understands. Because if you are a beginner to trading, some of these things are very confusing and it's not easy for you to understand. But you see, when we start trading, you see, it becomes very simple for you to understand. Okay, so don't be confused at all.
All right.
Yeah.
Prof,
When we start with the practicals, you will see that it's very simple. We will teach you all those things, but at least this is just an information for you to know how we trade and the things we do in Forex. At least this is just an idea we want to give it to you. But when we get to the stage 2, the subjective stage where we are doing serious, what we are doing here is just an information that we are giving to you. But when we get to the stage 2, subjective stage, where we are doing serious analysis, how you can trade with subjectivity, we will do all this, but we will bring all these things that we have talked about, the base currency, code currency, leverage, lot size, spread, and everything into play. And you get to know how it works, okay? Very, very simple. So don't be confused at all.
Yeah, all right. Okay.
Welcome, please.
hello, Prof.
I'm going to share. I want to share something on the platform, and you will see how the lot size is being used. Okay. Okay. Yeah, Mr. Collins, you want to talk?
Yes, I just wanted to add something to the lot size explanation.
All right.
Yeah, assuming you've gone to the market and you are buying something from the market, like you want some specific quantity. So instead of saying maybe you want 3, 4, or 5, we use the lot size instead. So the lot size is actually measuring the unit, like the quantity you want to
Yes.
buy from the system.
Yeah.
So with the quantity too, you know that if you say 2, let's say you want to buy 2 plantain, it means you have to pay something for it. You pay some amount for it. And that amount is what is coming from your money, your account balance. I hope it's clear.
Sure. I mean, is
So
it clear with you?
the lot size is what you are using to buy the your money is what you are using to specify the quantity that you need, which is the lot size.
Good. Mommy, are you okay? Oh, some friends came in late. Sorry, we are done. Okay. Make sure. Don't forget. We always meet on Sundays 4 p.m. By 3:50, you should be around to join the class. You know, forex trading is a time game, and we do not waste time by waiting and waiting and waiting for minutes before others will join. Exactly 4 p.m. Latest by 4:10 we start, and that's it. So make sure next time you are around by 3:50 you are around to join the class. Mommy, you wanted to talk, please. You can talk. Hello.
Okay, boys, I'll come early next time.
All right, bro. And I'll encourage you that you can invite your friends too.
Okay, I will do that.
Sure. Thank you. Okay. If there is no other question or comment or anything like that, we will call it a day.
All right.
So God bless
Thank you
you.
very much.
Amen. Next week, same time, 4 p.m. we start. And within a week, I'll be posting a lot of things. Make sure you are active on the platform. You read, you comment, and then you can comment with emojis and all that. At least be active. Be active. And I encourage you that if you are new to trading, don't be discouraged. Put in the hard work, learn a lot. The Bible says that love not sleep, lest poverty visit you. By 2-3 years time, my friend, things will change. So let's be active. Thank you, and God be with you, and see you next week. Goodbye.
Bye bye.